Hello, guys. Welcome to Stacking Stocks once again, and many thanks for tuning in today. It's getting hot in the kitchen yet again. We're going to discuss NEO stock catalyst today. What do we know? Electric vehicle stocks that have been witnessing volatility in recent sessions were seen moving higher in pre-market trading recently. The broader market is moving up, with futures pointing to a higher open on Wall Street. S&P 500 futures are up. Dow futures were higher, and the NASDAQ 100 futures were advancing. The positivity is premised on the back of indications that lawmakers may reach a deal to avoid a U.S. government default. Chinese EV giant NIO Incorporated received a shot in the arm from a positive analyst action. Goldman Sachs analyst Fei Fang upgraded NIO shares from a neutral to buy. The analyst attributed his positive stance to the potential presented by the company's upcoming ET7 sedan model. NIO also released its third quarter financial report recently, and investors are having mixed reactions. The company's American depository shares initially jumped, but then turned into the red before returning to a gain. So what next for the stock? NIO had previously reported that it delivered 24,439 vehicles in the third quarter, more than doubling what it reported in the year-ago period. That figure also exceeded lowered expectations after the company alerted investors that supply chain constraints were affecting production. But third quarter results showed the company's net losses and operating losses grew sequentially from the prior quarter. Revenue was also above the second quarter as the company delivered more vehicles in the third quarter. But it said vehicle margin dropped more than 200 basis points sequentially from the previous quarter. The drop in vehicle margin is notable for investors who might have initially just looked at gross margin, which grew. That increase in gross margin, however, was due to sales of automotive regulatory credits, according to the company. Vehicle margin dropped, it said, because of increased financing at subsidized rates for vehicle purchases, which resulted in a deduction of vehicle revenue and an increase in tooling depreciation costs. The bottom line was a massive loss in the quarter compared to the second quarter of 2021. Investors who hoped the third quarter was another step closer to profitability were pretty disappointed. But NIO shares likely are holding up because there are still several catalysts coming that look promising. NIO began selling in Norway earlier this year and will expand in Europe with sales planned in Germany next year. And the company said it plans 3 new products in 2022, including the highly anticipated ET7 luxury sedan. Those plans are likely what helped keep the stock trading in the black recently as investors digest the third quarter results. Chinese competitor XPeng also made some announcements about its autonomous technology that got investors excited. Investors have pushed XPeng shares higher on the news, and Tesla also had several items of good news that have its shares moving higher. NIO hasn't come out with any specific announcements, but seems to be moving in sympathy as investors feel it has similar prospects to its peers. What's good for the EV sector is likely good for NIO, and with XPeng releasing updates for a semi-autonomous driving technology, investors likely look forward to seeing what is next from NIO. At its Tech Day, XPeng launched the newest version of its advanced driver assistance system, and it included a feature for autonomous city driving. NIO has already launched its semi-autonomous Navigate on Pilot system, which will compete with Tesla and now XPeng. NIO says its system can also be used in the city in addition to highways. It also adjusts speed based on speed limits and switches lanes based on road conditions. Investors are looking forward to the release of the company's new ET7 sedan and its assisted driving features early next year. So is the stock likely to decline further in the near term, or are gains looking more likely? Based on current trends, the NIO's near-term outlook indicates a higher chance of a rise. The longer-term outlook for NIO stock is also looking better. Demand for EVs in China remains robust, with NIO indicating that it saw record levels of bookings in October. The production issues NIO faces are also likely to be transitory. The company has indicated that it was looking to double the capacity of its plant in Hefei, China, to 240,000 vehicles a year, with production likely rising to over 300,000 units with additional shifts. The company is also expanding its product line with its first sedan, the ET7, likely to begin deliveries as soon as the first quarter of next year, with 2 other models also in the pipeline for a 2022 launch. The economics of NIO's business is also getting better. The company's net loss for the third quarter was narrower than expected. Well, this is crazy. Electric vehicles are the future of transportation, but picking the right EV stocks can be tricky. NIO has multiple new launches slated for 2022, including its first sedan dubbed the ET7, which is expected to offer a range of around 1,000 kilometers. Demand should hold up in the long term, as the Chinese government wants about 20% of all new car sales to come from new energy vehicles that don't run on gasoline from 2025 onward. NIO's early mover advantage in the Chinese premium EV space and its investments in charging stations and related infrastructure should give it an edge as the market expands. NIO is also poised to become more profitable going forward. Although investors are right to be concerned about the mounting risks of investing in Chinese stocks, given the slew of regulatory actions in recent months, we think the sell-off in EV companies such as NIO is probably overdone. Unlike the big tech players, which are typically platform businesses with significant power, EVs are, at least in a relative sense, fledgling businesses that are seen as crucial to achieving China's aggressive emissions reduction targets. Separately, unlike education and tech, which are predominantly domestic businesses catering to Chinese customers and facing limited foreign competition, EV players compete head-on with global names such as Tesla. Moreover, unlike Chinese education players and big tech companies with a limited market overseas, EV players are also looking to make inroads into international markets as well. Considering this, we really think it's unlikely that the state would look to harm EV players in any way. We've established that the Chinese electric vehicle space is booming right now, with China-based manufacturers accounting for over 50% of global EV deliveries. Demand for EVs in China is likely to remain robust as the Chinese government wants about 25% of all new cars sold in the country to be electric by 2025, up from roughly 5% at present. While Tesla is a leader in the Chinese luxury EV market, driven by production at its new Shanghai facility, NIO, XPeng, and Li Auto, three relatively young U.S.-listed Chinese electric vehicle players, have also been gaining lots of traction. While valuations are certainly high, investors are likely betting that these companies will continue to grow in the domestic market while eventually playing a larger role in the global EV space, leveraging China's relatively low-cost manufacturing and the country's ecosystem of battery and auto parts suppliers. Of the three companies, NIO might be the safer bet, considering its slightly longer track record, higher revenues, and investments in technology such as battery swaps and self-driving. Li Auto also looks attractive considering its rapid growth, driven by the uptake of its hybrid powertrains and relatively attractive valuation. As part of its initial move to Norway, its first market outside China, NIO plans to establish a full NIO ecosystem there. This includes the aforementioned community NIO houses, as well as a service network and its unique battery charging and swap stations. The company says that it expects to establish a series of battery swap stations connecting 5 major cities and freeways in Norway by the end of 2022. The stations provide a line of subscription revenue for NIO and offer customers fast battery replacements as an alternative to lengthy charging times. Of course, it takes more than just a brand to maintain customer loyalty and build a successful company. And NIO plans to build on its product line significantly over the next year. It'll introduce 3 new products in 2022, including its technology-laden ET7 luxury sedan, which will be its first non-SUV model. That sedan will be available in both Norway and Germany, in addition to China, by the end of next year. And the company is expanding its production capacity to grow those vehicle sales. With the sales set to grow, the stock should also be on the progression roadmap. Watch out for NIO stock. Remember to like, share, and subscribe. Stay safe and see you next time right here on Stacking Stocks.